The hardest part of wealth building is the middle years. Your efforts feel invisible. You save, you invest, and you work, yet your balance moves slowly. Successful investors develop a boring mindset. They trust the math. If I offer you $3 million in cash today, or a single penny that doubles in value every day for 31 days, which one do you choose? Choosing the $3 million feels safe, but choosing the penny unlocks the true power of compound interest for wealth building and financial freedom. By day 31, that single penny grows into over $10.7 million. This is not magic. This is the math of compound growth. Most people miss out on riches because they quit before the curve turns upward. You're about to learn how to make time your most powerful employee, the engine of compound growth. Compound growth happens when your earnings begin to earn their own money. You stop working for every dollar. Instead, your dollars start working for you. Imagine you invest $10,000 today. You earn a 10% annual return. At the end of year one, you have $11,000. You earned $1,000 in profit. In year two, you do not only earn 10% on your original $10,000, you also earn 10% on the $1,000 of profit from year one. Your new profit is $1,100. This extra $100 seems small. However, over 30 years, this cycle creates a massive gap between those who save and those who invest. $10,000 at a 10% return grows to over $174,000 in 30 years without you adding another cent. If you only use simple interest, you would have only $40,000. The difference is $134,000 created by nothing but time and consistency. Starting small with $50. You do not need a large inheritance to build a fortune. You need a start date. Consider a 20-year-old professional who saves $50 every month. They put this money into a low-cost index fund with an average 10% annual return. By the time they turn 65, they have contributed $27,000 of their own money. Their account balance sits at over $524,000. Now look at a 30-year-old who starts with the same $50 a month. By age 65, they have over $190,000. Waiting 10 years cost them over $330,000. Small amounts matter. Your $50 monthly contribution is a seed. If you plant it early, the tree grows larger. If you wait, you lose the most valuable asset you own: time, the creative compound effect. Compound growth applies to your skills and your business too. Aspiring creators often quit because they see zero results in the first 3 months. Think of a YouTube channel. Your first video reaches 10 people. Your second video reaches 10 more. These 20 people represent your base. If you improve your skills by only 1% every week, the results do not stay linear. Better editing leads to longer watch time. Longer watch time leads to more recommendations. More recommendations lead to more subscribers. This is the feedback loop. A creator who posts once a week for 5 years often sees 90% of their growth in the final year. The first 4 years provide the foundation. Consistency builds an audience that grows automatically. Your effort stays the same, but your results explode. If you find this logic helpful, click the like button below. Subscribing to this channel helps you stay consistent with your financial goals. We post weekly guides to help you master your money and your mindset. Join us and start your growth journey today. The psychology of the Long Game Society rewards short-term thinking. We want the prize now. Compound growth requires you to ignore the crowd. The hardest part of wealth building is the middle years. In the middle, your efforts feel invisible. You save, you invest, and you work, yet your balance moves slowly. Successful investors develop a boring mindset. They do not check their accounts every day. They do not chase get-rich-quick schemes. They trust the math. Think of an ice cube in a room. The room is 20 degrees. You increase the heat 1 degree at a time. 21, 22, 23. Nothing happens. The ice remains solid. You reach 30 degrees. Still nothing. Then you hit 32 degrees. The ice begins to melt. 1 degree made the difference, but the previous 12 degrees made the change possible. Your savings work the same way. You are building the temperature. Do not stop at 31 degrees. Practical steps to start today. 1. Automate your savings. Set up a transfer of $50 or $100 to an investment account the day you get paid. 2. Choose low-cost index funds. These funds track the whole market and keep your fees low. 3. Increase your contributions. Every time you get a raise or a bonus, move half of that new money into your investments. 4. Focus on your 1% improvement. Whether it is your job or your side hustle, get slightly better every day. Compound growth turns small, consistent actions into life-changing results. You saw how a penny becomes millions. You saw how $50 a month becomes a retirement fund. You saw how creative habits build massive audiences. The math is clear. Success comes to those who start early and refuse to quit. What is one small habit you will start today? Tell me in the comments. Share this video with one friend who needs to see the power of starting small. I will see you in the next video.